The whole point of business is to put yourself in a position today so that you get to play the game again tomorrow. Why did you start your business and why are you still in business? Every one of those goals can be then tied to a number. The numbers are, it's a path. So in order to make a data-driven decision, we need data first.
What one key piece of advice would you like to give to all the entrepreneurs watching and listening today?
Lean into what scares you the most.
Hey, and welcome to another episode of the Business Growth Show. I'm your host, Athin Cassiotis, and today I have an awesome guest. His name is Andy Weins. Through consulting, teaching, podcasting, and writing, Andy Weins is an enthusiastic supporter of veterans, entrepreneurs, and the environment. He provides veterans, entrepreneurs, and business leaders with the tactical advice to level up. And true to his Wisconsin roots, Weins is a Midwest reality check for anyone facing self-doubt. His speaking engagements use data-driven methodologies and battle-tested experiences to give audiences practical takeaways. And Andy has done over 2 decades of military service, including service during Operation Iraqi Freedom and Operation Enduring Freedom, where he continues to serve as a U.S. Army Reserve career counselor, holding the rank of Master Sergeant E8. And outside of speaking, his ventures include Green Up Solutions in consulting and Camo crew responsible junk removal and solid waste removal, and has won numerous awards through the years, most recently being named 2026 Titan 100 Hall of Fame member, honoring his top 100 executives in Wisconsin, and 2023 Waste 360 40 under 40 member, which honors the next generation of leaders who are shaping the future of the waste and recycling industry, and 2022 and 2023 Outstanding Business of the Year, Service Disabled Veteran Owned Small Business Award at the Wisconsin Governor's Annual Conference on Diverse Business Development. Welcome, Andy, and thanks for being on the Business Growth Show.
Hey, thanks so much. Appreciate being on here.
You're welcome, mate. And it's just going to be an amazing show watching and listening today. And we're having a bit of a joke beforehand that we both started in the waste management industry and still there today. So we like to talk a bit of rubbish. I'm sure we'll hopefully talk some good stuff here today and have some fun with a lot of other business stuff that we want to get into. And I guess as we're getting into it today, you are a successful entrepreneur. Yeah. So for those people who don't know who you are, introduce yourself by telling us more about you and your journey.
Yeah, I'm a 4th-generation entrepreneur, great-grandfather all the way through. I grew up on my grandparents' farm. I grew up hearing stories about my great-grandfather recycling in the salvage business. And back in 2009, I'd come home from Iraq in 2007. And obviously we had the big economic downturn, 2007, 8. And all of a sudden by January of 2009, I was laid off. I was 24 years old. I was uneducated, unemployable really at that moment. And I started driving around the north side of Milwaukee here in Wisconsin. Started driving around picking up scrap, sheet iron on the side of the road. And one day some guy said, hey, I'll pay you to come in my basement and clean it out. And that was like this revolutionary moment in my life where it's like, wait, I'll take this stuff for free and you're willing to pay me to go in your basement? Like, sign me up. And, so I did the side hustle. I ended up getting my degree, bachelor's degree in business management, trials, tribulations, another deployment to Guantanamo Bay, Cuba for a year. Like right before I left for Gitmo, I told my father-in-law at the time, I said, when I come home, I'm never going to have a job ever again. And next month, I celebrate 10 years of being successfully unemployable. And I could not be happier.
I love it, mate. Yes, I think once we go down the entrepreneur route, we've done it for a while. We're definitely unemployable. I joke about it with my wife as well. It's hard being told what to do when you've been doing your own thing for a while. And it's not for everybody, but if we want to make a change in ourselves, then we can really make a big impact and bring people along the journey. So love the story, and well done for having a go and making it happen. And that's why you're here today. And I know that you've got a new book, which is called Stop Avoiding Your Numbers. I think numbers is one of the most topics I love because it's so important in business. So tell us more about this new book.
So I wrote my first book about 3 years ago. It came out, and that book's all about neurolinguistics programming. It's a book about words and how language changes and shapes the way you see the world, and the way you see the world changes your future. And what was interesting is as I was finishing up that book and launched it, the woman I did ghostwriting work for, she said, hey, I'm really struggling with my business. And I've been doing consulting, mostly operational, and I always lean into the numbers, and I understand profit and loss statements and financial forecasting. It comes natural to me. Excel, getting on Excel and math. I'm a math guy. I love a huge fan of math. Anyhow, so she had said to me, she's like, I'm really struggling in my business. I said, well, let me ask some questions. And she goes, I'm working more than ever and I'm making less money than ever. And I go, well, that's not good, right? The math isn't mathing. So in an hour, I took apart her P&L. I gave her some recommendations. And at the end, she goes, you really should focus on this numbers thing. And I sat there, I go, we just spent 18 months writing a book together about words. And now you're telling me maybe I should focus on numbers because the words book was a real challenge. It's like, what is your thought leadership and developing my voice and researching. And then this numbers thing is like, oh yeah. What do that? Why didn't you do that? Why don't you know that? What's wrong with you? Much more natural fit. And so I was doing consulting work and then I become a fractional CFO for a few clients. I was doing operational consulting and it always came back to the numbers because I want to see, well, we're making these changes. How is it impacting the numbers? And more often than not, I realized people had no clue what they were talking about when it came to their financial statements. They had no scorecard. They had no idea. They were just doing bank balance accounting. It's how much money do I have in my bank? That's what I can spend. I don't know how it got there. I don't know where it's going. I just know I'm not in the red. And that's a mindset. And so I realized without scorecards, without data tracking, we don't know how marketing is doing or sales are doing, operations, and everything comes back to the numbers, right? And so I shifted from doing general business consulting and operations consulting to fractional CFO work. And along the way, I met another fractional CFO, and he said to me, he said, I always wanted to write a book. And I said, okay, well, let's write a book. He's like, well, it's not that easy. I go, sure it is. Making it again, I use my neural linguistics programming. I said, you've always wanted to. You said you should. You said you were going to. You've made no progress. Let's put pen to paper. And so we took a journey together 18 months ago. We wrote a book called Stop Avoiding Your Numbers, the guide for small business owner to, or the guide, I need to really nail this out. The guide for financial confidence for small business owners. There's our tagline. And that's the key. The reason why people avoid their numbers is a lack of confidence. They're intimidated, they're afraid, they're ashamed. And so when we can build confidence, then people will lean in. I love the feeling, when I'm taking on clients, it's normally about the second or third call when we clean up the data and we show them something. And I can show, hey, these are the actions and activities, and here's the financial impact. I had a woman, she'd had a business for 6 years. She never had a profit and loss statement. She just had like this ledger of money in, money out, money in, money out. It was like a checkbook balance. So it's not balance sheet. It's not a profit and loss statement. It kind of does some things, and by our second or third week, I had built out a profit and loss statement and I pulled it up on the screen and I saw her light up because in that moment, it's like, wow, all this work I've done has a tangible result I can look at. I am proud of the number, whatever the number is. I'm proud that I feel like a real business owner. She went from having a hobby to having a business like that.
Yeah, I love it, man. So important. And yeah, so interesting. I love the journey of what you've done, obviously, and then doing the fractional CFO going and NLP. We'll get into that a little bit later because I'm an NLP master practitioner as well. So I love
Yep,
this
yep.
because I think it's so important too. Because if they hate numbers, then we got to fix the mindset as well, right? To make them love numbers so that we can.
That's the yeah. Here's the thing. The book is Stop Avoiding Your Numbers. It's a book about being a fractional CFO, and the first two chapters are about vision. No numbers. Why you got into business and where are you going? That's essentially the first whole section. And then how does your business serve you versus you serving your business? It always comes back to, I look at words and numbers. It's data in, right? Equations and then a result. It's the same thing. That's why the book on NLP is, I'll tell you, the title is called Words Fucking Matter. Retraining your brain to use language that serves you. I got a copy right here. Like it is whether it's numbers or words, it's for the everyday person to not be intimidated. If I told you, hey, I wrote a book about psychology specifically focusing on NLP at a fifth grade reading level, people will be like, well, I don't even know what that means. And yet you say words matter, they're like, oh, words do matter. And all of a sudden resonate with that audience. You reduce the stigma.
Yeah, no, I love it. So important, and yeah, I think maybe the journey of that then took you here, right? To have all that
Yeah.
experience with the mindset to then go, okay, now I can really specialize, right, in what you're doing in the
Yeah.
numbers work, which is great with the book, and obviously how you're helping clients. So I love this topic. I'll leave it up to you. So when people are thinking about their numbers, like where should we be starting? What? Yeah, I'd love to hear it from you.
Well, like I said in the book, start with the two questions. I've been in the Army 20 plus years. In the last 10 years, I've been an Army uh, career counselor, Army Reserve career counselor. And one of the questions I always sit down with soldiers, I say two questions. Why did you join the Army, and why are you still in the Army? And those are the two questions I ask business owners. Same two questions. Why did you start your business, and why are you still in business? Every one of those goals can be then tied to a number. Some people need elaborate financial statements, and some people can get by with an Excel spreadsheet that gives them what they need. When I understand where we're going, the numbers it's a path. It's a in order to make a data-driven decision, we need data first. And so once you understand where we want to go, then we can look at, well, where are we now? And almost every time I get into somebody's numbers, they're inaccurate. It's bad data. Their accountant's not paying attention. Their bookkeeper's not putting it in right. They don't know what questions to even ask. So they're like, I don't know. I haven't been audited by the IRS yet. So that's a good thing. And that's kind of where it ends. And so it always comes back to the profit and loss statement. You got to start something that tells us something about the business. From there, I can make a pretty quick assessment on how your bookkeeper's doing, how your accountant's doing, and when I asked some questions about your P&L, your curiosity will kind of guide me into, ooh, let's talk about this and let's keep this one aside. A lot of people say, oh, I got to stop spending money to make more money. It's like, well, not necessarily. Maybe we need to raise prices. Maybe we need to sell more. Maybe we need to sell more of the right stuff. Cutting expenses is a function. The two things people always want to do is I want to raise my prices, I want to cut expenses. It's like, well, those are two levers. And until we look at the profit and loss statement and I ask some questions and we have conversations, let's not start yanking levers. That's what business owners, it's always the quick fix. And you think this is going to work, and then well, we gotta have a baseline and then implement solutions and then test out to see how they work.
Yeah, I love that. So powerful. And yeah, the P&L, you know, like you said, I think where it's come from you, my understanding, right? And similar to me, you've done the bachelor's degree in business management, right? So
Mm-hmm.
I even though I dropped out of school, I went back to do an MBA, and same thing, right? I got to do the accounting finance subject, so I understand it pretty well. And that's what I like to tell my clients as well. It's like you need to understand. You don't have to necessarily be an accountant, but you need to understand the numbers well enough so that you can ask the right questions and know what you're looking at, right?
That's Yeah. Throughout the book, we give about 100 questions to ask. We give no answers. I tell people all the time, as a consultant, it's never my job to give answers. I do two things. I ask questions and I give information. Because people say, well, what do you think I should do? And I'll say, okay, well, what are our options? And this is what this path looks like, and this is what this path looks like. And more often than not, they're like, well, that's the good one. It's like, that's good. You made that choice. Good. I merely supplied you in the information and asked you the questions. You know, you asked, so you mentioned about my bachelor's degree. Earlier today, I was in front of my guys and I was building a quick widget on Excel, and he's watching me plug formulas. He's like, mind you, he's 23, he graduated college, 8 months ago or whatever. He's like, dude, where'd you learn how to like do that stuff? Like college? And I go, no. I was like, I said, 10 years ago, I started a business and realized that I needed to figure this stuff out. And I'm just plugging, some very basic formulas. And again, he's trying to figure out, we're trying to factor, or not trying, we were building on a widget to predict dollars per hour. And he's at like you know, dollars divided by hours is dollars per hour. He's at that level of the math. And I'm at, how do we get, predictive indicators based on the number of hours worked, revenue generated, employees, and I go, well, hold on. What they teach you in college? He's like, not that shit. And I go, what's your degree? And he goes, business admin. And I go, okay. So case in point, you have an idea that like maybe you have to do this. School of Hard Knocks. I got a B minus in accounting. It was the lowest grade I ever got in college, and I taught myself QuickBooks. I still have no clue how accounting works. right? In the traditional credits and debits. I know how QuickBooks Online works. I know how my profit and loss statement works, and I know how to send an email to my accountant. So I'm set, right? Like jack of all trades. We right before the show here, we were talking about my podcast. I had a podcast. I got to about 180 episodes, and you're like, well, that was in the top 1% of podcasts. Also, I think it's 98% of authors only write one book. Well, I wrote two books. So I'm in the top 1% of podcasters in the world. I'm in the top 2% of book writers in the world. I'm not in the top 10. I'm like pretty good at a lot of things. And, jack of all trade and absolutely master of none. Like, put me in a room with 100 business owners, I might be the best accountant. Put me in the room with 100 accountants, and I am by far the worst. And I'm good with that.
Yeah, exactly. No, I love it. And this is the thing, like we don't, and as a business owner, we have to be more of a generalist, right? Like as in we got to know
100%.
enough of all the different departments so that you can manage them and get the specialists, whether they're in your team or they're external, right? From you as well.
Our job as business owners is to ask really good questions and then again give insight. I own a business. We do about $2.5 million. We'll do closer to 3.5 this year. And I have a sales, a production manager oversees sales and operations. I have an HR manager. I have a videographer. I have an integrator who acts like as a COO, chief operations officer. My job is to ask questions so that it gets them thinking and to provide vision. That's my entire job because my ability to pick up the phone and book jobs matters not. My ability to go out and do jobs matters not. Me being the smartest person in the world does not allow our business to grow. When I ask questions, it's because I'm genuinely curious. And then I want to hear the amazing things that come out of our leadership's mouths like, oh, yeah, this is how we're going to solve it. We have a few leaders in our organization that have taken what I built and taken it farther than I can almost see. When our production manager talks about the CRM, we use HubSpot. I don't even have a login for HubSpot. And that to me is a sign of success. I do not even own, I don't have a login and sales are good. Sales are up. What are we doing right? This. What are we doing wrong? That. Okay. Let's do more of the things that are working and less of the things that aren't. Uh, Go team. Right. But really that's my job now as a visionary where even 2 years ago, I was still answering the phones. 2 years ago at this time, I had I had fired the president of our company. I lost 9 of my top 11 employees in a 3-month period. And I was back after 8 years in business. I was back answering the phones every morning. Like that was a humbling experience. And now 2 years later, I'm going to come visit you in Australia soon. Like that's where I'm at in my business because I put the work in being generally understanding all the parts of the business, how they function together. So I can bridge the gap between two departments that might be, two ships passing in the night. I can ask the questions, get information so they get on the same page. And then I can step back and let the magic happen.
Yeah, no, I love it. So true. It's gold here, what Andy's telling us here today, right? So that's why I always say, you know, learn the things, but also apply it, strategic thinking, how do things work together, right? All of that type of stuff. And then it's all about the numbers. Now, you mentioned around profit and loss, of course, right? Knowing the revenue, the expenses, and obviously the net profit at the end. But there's the two other financial reports. Obviously, we got the balance sheet, we got the cash flow
Yep.
statement. So just for the people out
Yes.
there, do you want to talk a little bit
Yeah.
about those as well? Yeah.
Yeah, this is probably the most nerding out I've done on financial documents and a podcast. So we'll break them down Barney style the best I can. Profit and loss shows income, money in, balance sheet, then expenses shows money out. Our business, most businesses have a COGS, cost of goods sold. So now we can see how many dollars we brought in, cost of goods sold, how many dollars it cost us to bring those dollars in, and then expenses, what does it cost us to run the overall business? You end up with net profit, EBIT, EBITDA, a couple different terminologies. All right, that document there. So now we know how much money came in, how much money went out. Okay, we have a number net profit. Good. We'll table that. Next thing, balance sheet. What do you own? Assets. What do you owe? Liabilities. And then owner's equity. What is owed to the owner? What did he bring in, him or her bring in to start? And that needs to balance, right? If you have $100,000 truck, right? That's the asset. Well, you have $100,000 in liabilities. Okay, simple math. Then you go to your cash flow statements. Cash flow statement starts with how much money came in and out. That comes from your profit and loss statement.
Yeah.
And then you're factoring in, okay, on your balance sheet, for example, when you make a payment to a truck or a building that you own, it's not showing up on your P&L. So now we have to acknowledge that money going out. So that's now even less money. So if you bring in $500,000 a year, but you make $200,000 in truck payments, well, now you're down to $300,000. That's significantly different, 300,000 versus 500,000. And then we also bring in from the balance sheet, you bring in accounts receivable. How much do people owe you? So of the $500,000 in net profit, 200,000 got eaten up by truck payments, and your customers owe you another $100,000. Well, now you only brought in $200,000 over that given period of time. Most businesses have an idea of what a profit and loss statement is. They have some form of a balance sheet, as in they're like, okay, I have trucks, I have, basically things that they're paying off, right? Typically, I don't see a lot of depreciation. This is when I first walk in. None of them have cash flow statements. And you need a clean P&L and a balance sheet before you can have a cash flow statement. I had a client earlier this year, and she's like, oh, this is through June. And she's like, it shows I made $32,000 in my business after I paid myself, but I have like $2,000 in my bank account. And I go, okay, let's take a look. And I just first started working with her. I'm like, okay, my profit and loss looks right. Accountants doing their job. And I go, what's going on with your balance sheet? She goes, I don't know. I said, oh, let's take a look at the balance sheet. It's like, okay, this looks good. She had bought 2 trucks. I can see that, they're being depreciated. I go to a cash flow statement. I go, okay, well, there's $28,000 in payments on trucks. You brought in 30. You have $2,000 in your bank. Yep, that mathed. You brought in 30 through profit and loss statement through your income and expenses. Of the 30, you spent $28,000 to pay off some loans, and you have $2,000 in your bank. All of a sudden, where she had thought her break-even point was $20,000 a month, well, now your break-even point for her was about $24,000 a month because she hadn't factored in those 2 vehicle loans and the SBA loan. So that changed the way she did business right off the bat. And so understanding that third statement is key. Like you said from the top, most companies I work with, it's probably 6 to 8 weeks of working with them before we even can tackle a cash flow statement because we got a lot to clean up in the P&L and the balance sheet. Most businesses, I work exclusively with businesses under 200 or under $2 million in revenue. Most businesses under $2 million in revenue have a very clean, simple balance sheet. And so it's really getting the P&L down. Then we can truly understand the cash flow statement. And at the end of the day, this the old adage, revenue is for vanity, profits for sanity, right? Profits for show, or revenues for show and profits for grow. Cash is king. None of those things matter when you run out of money. Money in the bank, money to invest, money to store away trumps all other metrics.
Yeah, definitely, completely agree. And yeah, a lot with my clients, we do like a cash flow forecast, right? And I think this is the difference.
Yeah.
I'd love for you to share because when you look at QuickBooks, Xero, these MyOb, these accounting platforms, they're great. However, they're all the past, right? And
Yeah. So here, this is the 3 parts. This is the 3 parts. Accountants and bookkeepers, they focus on the what. They're only in reflection, only looking backwards. A lot of analysis is the so what, that is the realization. So what, realization. Our job as a CFO is to do the third step, which is regulation. What now? The reason I say it takes normally 90 days with my clients before their data is in a place where I can actually start forecasting. If I took data day one that they gave me and tried forecasting it, you might as well fire me now because the data is bad every time. There's something about the data that's incorrect. There's the business owner doesn't understand it. The chart of accounts is a mess. And so in order to forecast, we have to get to a level playing field to start with. Even my business, we implemented a new ADP software, and at the end of the year, our last 2 payrolls did not come over correctly. So now for me, it's the end of the year. I'm ready to do my next year forecasting, and I'm stuck until I get the data from ADP to put in my P&L. Until I say, yep, these numbers are accurate, I have my pro forma built. I have some tweaks I want to make. I'm not going to make those final tweaks until I get the final data. I do a lot of pro formas or cash flow forecasts, right? So pro forma is think about your P&L instead of being looking backwards, it's looking forward, right? And then I do a mock balance sheet. What major purchases are we going to make this year? And then here's your cash flows. My business partner came out to me. We're doing an expansion in our warehouse. We're building out some offices, about $150,000 capital expenditure. And he goes, "How do we afford this?" And he's not a numbers guy. And I explained it to him like, "Okay, well, it's going to be $1,250 a month to pay it off, blah, blah, blah. This is how much it's going to cost us. This is the cost of the build out versus renting offices. And this is how it impacts the P&L." And he goes, "Oh, we can afford that." Because $150,000 sounds like a lot of money. And when you look at it, well, this is necessary for expansion, and this is the cost of not doing it. Wait, here's the cost of not doing it. Here's the cost of doing it differently. And this is how we can afford it. As soon as I said, this is how we afford it, he's like, "Oh, that makes sense." It's no different from my wife and I. We plan out one vacation a quarter. It's like, well, how do we afford this? Well, we do a forecast. How much money are we bringing in? How much is going out? How much do we keep? How much do we reinvest into our vacation fund? It's all very simple math. It's like algebra though, right? With algebra, when you screw up something at the top, the bottom will never be right. And so same thing here. We got to get the P&L right, balance sheet right. Then we can do a cash flow statement. Once everything is right, then we can do a pro forma, and then we can do any well, a cash flow forecast.
Yeah, no, I love it. And I love the holiday fund thing there, with the wife. It's like the same
Absolutely.
rules, because we gotta enjoy ourselves, right, on this journey.
Oh, we have a dashboard. I mean, so we're looking at buying a house, and she's like, "We can't afford this." I'm like, "Well, this is how we can afford it." Right. And at one point, she's like, it's because she works part time, and she goes, "Well, if I go back to work full time, we can easily afford it." I go, "Yeah, but you hate working full time." And I don't like it when you're working full time because I don't like you when you're working full time. And I go, "I'll stay with the small house if that means," right? That's the difference there. Um, because she has a job and I don't. So, I have it's not feast and famine, but and same with her. She grew up in a family. Her father owns a business. And so the not having a predictable paycheck is, her risk aversion is different than mine. We'll say
Yeah,
that.
I love it. Well, this is the joys of partners, right? Like I'm a bit more risky, and my wife is similar,
Oh, yeah.
less risky. So you sort of got to go somewhere in between. It's good to have partners like that. Otherwise, there's too much risk or too much, like comfort in a relationship. Yeah.
Yeah. I have a good friend of mine, and she said that when she was 16, her dad took her to the car dealership and she picked out a brand new car on the showroom floor. And the next month, their power got turned off because her dad was an entrepreneur and was like, "We got the money, let's do it." And then it's like, "Oh, we got to pay a light bill next month." And so, yes, and because I do numbers and I look at data for a living, um, when I say what I can or can't afford, it's risky, and yet the data checks out. When I first started in business, I remember I looked at my brother. I was like, we'll figure it out, and we always kind of figured it out. I did not have the data to back it up. I had a lot of gumption and nothing to lose. Now that I got something to lose, I'm dotting the I's and crossing the T's.
Yeah, no, I love it. It's so good. And you mentioned something before around scorecards, right? So do you
Mm,
want to talk about this more? Because I think there's obviously a lot of metrics within the business. Like you got the financial reports, but there's also metrics
yep.
that sort of, a compass like what we got to look at, right? With the numbers. So tell us more about how those work.
Scorecards. It's a weekly measure of how you're doing. That's the simplest way of putting it. It's typically 3 to 5 of the most significant data points within your business. The best scorecard metrics are one number in your business compared to another number in your business. So, for example, let's say you have a bakery, right? You can count how many customers per day, right? Whatever, 100 customers per day. That's a number. It's a good indicator. We got to compare it to something. We got to compare it to how many customers do we need every day in the bakery, right? And so let's just do a simple, very very simple example. Let's say your bakery does $10,000. How do I want to say? Let's say $30,000. That's going to make my math a little simpler. $30,000 a month, right? So it's doing $1,000 a day. The average customer spends $5. Okay, we need an average of 200 customers in the store every single day, in order for us to hit our $30,000. So instead of waiting to the end of the month to say, did we do $30,000? We said, did we or did we not have 200 customers today? Right. And now that 200 customers per day is a leading indicator of what your financials are going to turn out to. So the key with scorecard metrics is they're leading indicators. You measure something so you have a leading indicator of what might happen. Now let's take a look at that same metric, 200 customers per day. That can also be a lagging indicator, or is a lagging indicator for a social media post. We post to social media, we get 100 likes and 100 likes and 20 comments, and now we got 200 people coming in the door, 10 more people than the day before. Well, now that becomes a lagging indicator of your marketing efforts. And so you can even take a step further back. When we get social media engagement, then we know operationally we'll bring in more customers. Then we know we're going to have more money at the end of the month. So then you say, okay, well, what does it matter? Well, when you have a social media post that really hits and you know it's going to bring in more customers, you might want to staff up. You might want to buy, right? When you got a new video about to drop, you might want to make sure you got some extra coffee beans so you don't run out. And so now you're like, oh, wait, this is how all these things work. And the numbers we're talking about, a lot of people get intimidated. When I say like ROAS, return on ad spend, or dollars per hour, right? People are like, I don't even know what are you talking about? When I say simple things like how many customers came in today? What was the average ticket per customer? Now it's like, well, I kind of know those things. Good. Those are the numbers we're talking about. How long does it take you to do this thing? About 10 minutes, maybe 15. Well, is it 10 or 15? Because if it's 15 minutes, we can do 4 of them an hour. If it's 10 minutes, we can do 6 of them an hour. And that's a 50% difference between 4 to 6. And all of a sudden, making numbers simple, the simpler you can make numbers on a scorecard, the more relatable they are to you. So for example, our business, we run $125 an hour per man. That's our metric. When we hit $125 an hour on average for all teams every week, and we hit our weekly revenue numbers, I'm happy. I know that the profit and loss statement is going to be there because I already know $125 an hour gives us profit because I've already, again, done the analysis. I know how much money we need to make to cover, our not only cover a break even, but also give us profit. So I know our efficiency numbers. And so that's how a scorecard works. Figure out what 3 to 5 numbers mean the most to your business. And this is why I start with business, their vision. And I'll say, one of the first questions I say, why'd you start your business? Oh, to make money. How much money? $100,000 a year. Okay. How many hours do you want to work? 20 hours a week. Okay. So 20 hours a week across 50 weeks, you're going to take at least 2 weeks vacation, right? You're going to work 1,000 hours, which means you have to be doing $100 an hour billable on those 20 hours you're working in your business. They'll look at me like, okay, so how do we do that? You want to make 200,000? Okay, we increase it. So I always start with that vision because there's a difference between I want to grow this business and have multiple locations and scale it and sell it versus I want to live comfortably and not have to worry about money. Okay, that's it. Those are 2 completely different paths, 2 completely different things we measure. It always comes down to what matters to you. And when you understand when I understand the narrative of what motivates people, the numbers, the metrics that we're going to measure become very obvious. For me, we're growing and scaling. Growth takes a lot of capital, as we know. So I look at we're hitting our service revenue first, and we're doing it at a certain efficiency level where we don't run out of money. Because if we sell the heck out of junk removal and we're doing it at $100 an hour, I'm working harder to make less money. That doesn't sound interesting. And so making sure I'm tempering my expectations so I can grow strategically, because again, growth takes capital. Doesn't matter how much profit you have when you run out of money. When you run out, the purpose of business. Okay, we talked about the World Cup. I'll throw this to you real quick. Australia has 3 games, right? What happens after those 3 games?
Well, it depends if they go to the next round or not on how they go in their group of 4.
So what's the point of playing those 3 games?
Well, you're playing the 3 other teams in the group of 4, and then if you're in the top 2 or 3, then you have a chance to progressing to the next round. But just seeing if you're good enough, basically.
So hold on. So make it as simple as possible. What's the point?
To gain points for a win, right? Or a draw.
Okay.
Yeah.
And then what happened? Okay, so you want to get points for a winner or draw. Okay. And then what happens when you get to the top two? What happens?
Automatic qualification to the next round.
You get to play the game again. The whole point of business is to put yourself in a position today so that you get to play the game again tomorrow. I tell my guys all the time, and they're now first starting to understand it. Work is the reward. The only place in the world where reward comes before work is in the dictionary. Work is the reward. And what I mean by that is when you're an employee and you work, the more you work, what do you get? The more responsibilities, right? The more money, the more promotions. That's all more work. It's not less work. Some people think, oh, I'm going to climb the corporate ladder. It's going to be less work. That's so far from the truth. It is more work as you go up, right? As you know. And now you're talking about, right, the Australian football or soccer team, depending on which country you're depending on how you say it, right? Let's say soccer because it's simpler for me to understand, right? They train, they work, they bust their ass to go play a game so they can win, so they can play the game again the next day. Business is no different. Working towards the opportunity to play again tomorrow. And when you run out of cash, or like in the World Cup, right? When you don't score enough points, you don't get enough draws, right? You don't get to play the game again tomorrow. You ran out of money. You were given 3 opportunities to get 2 wins and you ran out of money. You didn't win. Let's go back to that bakery. We got to have 200 customers a day at $5 on average. Cheap bakery, I suppose. The cups of coffee are $5, $6 a piece. Anyhow, so we got to win more days than we lose. We got to get 220, 230 customers regularly because we know there's going to be that rainy day and only 150 people show up. So do we have to win all 30 days of the month? No. We probably need to win about 20 of them, though, to offset the 10 days we lost. And when you win 2 out of 3 times, you'll do all right. But when you only win 5 days a month, don't be surprised when you run out of money. And all the businesses I've ever talked to that have struggled financially or ran out of money, they were never surprised. They knew it. They could feel it. They didn't have the data. They didn't have the check engine light. All of a sudden it blew up and they didn't have the gauges telling them why they were losing money. In the same token, I have one client I took on recently and she goes, we're making tons of money and I don't know how. I was like, well, that's not good. I mean, that's a better problem to have, right? And she wants to scale it and then hand it off to her sons. But she goes, I don't know what's working well in our business from last year. And so I can't sell something I can't explain. And so we figured out why she was making so much money. That was a good problem to have. And yet she was frustrated that she didn't understand why she was making so much money. And it was all legit. It all worked out. But that's as scary, right? Success and failure, when you don't know how you got there, it's hard to learn from.
Yeah, no, I love it, man. So powerful. I love the work is the reward part of that. So good. And I guess one last thing that to make it practical, because I think this is important, because there's a lot of systems out there, right? We talked about CRMs, we talked about accounting systems. We've also got like job management systems in a lot of businesses, right?
Yeah.
How do you see is the simple or good way of, I guess, tracking the data and maybe putting it into dashboards or Excel or software systems to be able to, get these metrics going well and measuring them ongoing?
It comes down to what works best for you. For the longest time when I was first running the business, it was me and my Excel spreadsheet, and sometimes I hand jam stuff. Earlier today, when I was explaining some stuff to our guys, it was on a whiteboard. I was explaining to them how you can predict dollars per hour, and I was explaining to them, right? And then that turned into an Excel spreadsheet with the widget that I built, right? And now one of my guys is going to take that over. So every morning he's going to tell the guys, instead of waiting to the end of the day to figure out what their dollars per hour is, he's going to say, hey, in order to hit 125 hours per hour based on the jobs you have, you got to be done at this time. Whatever system works for you. That's what it comes down to. I can look at a profit and loss statement and get excited and find things. My business partner wants to know what the dollars per hour. My guys in the field, we've been explaining dollars per hour for years for them. They're still struggling. Instead, I say, get off the clock by 3 o'clock. right? Punch out by 3 o'clock and you'll hit your number. Sounds good, boss. It doesn't matter how you do it. My father's owned a business for 30 years. He has spiral ring notebooks and it just says March 2025. And if someone calls right now, I guarantee you, if someone calls and said, "Hey, you put my door in about 10 years ago, here's my address," he'll say what time of year it was, right? What time of year was it? And he'll go back to about that year, about whatever the weather was, look through it, pen through it, say, "Oh, yeah, you had a purple door. What's going on with it?" "Oh, yeah, it's not, because he always says a lifetime warranty." He goes, "Yep, I got your address in my notebook. That's as good enough for me. I'll be at your house the next week and fix your door." He he's owned a business for over 30 years. 35 years he'll have been in business this year. 1991 he started. So 35 years he's been in business. He does not have an email address, doesn't own a computer, doesn't know how to type. And when you call him, he will find his spiral ring notebook and he will verify whether or not he put your door in, and he has a lifetime warranty. That he also he's my father's 69 years old, and he's gonna be 70 here in about 2 months. He knows at his business he needs to put in 5 doors a week. That's it. So my mom will say, "Yep, it rained 2 days last week, so Dad only put in 3 doors. That's a bad week." That's his metric. 5 doors allows them to live comfortably. So everything's against 5 doors. He also knows, we all know this. Well, we're big into hunting in our family. In November, deer hunting is a big thing. So, guess what? He's putting a lot of doors in September and October when the weather's pretty decent, because by November, he takes the whole month off to go hunting. Again, 69 years old, doesn't have an email address, and he knows his numbers. 5 doors a week. That's it. And so start with what you're comfortable with. I'm especially in my first book, I talk about getting uncomfortable. You're already uncomfortable with numbers. Like, that's a foregone conclusion. People that are comfortable aren't talking to guys like me. So give yourself some grace. Start in a place that you can commit to. So I'm a numbers guy. Last year, I'm 41 now, and my wife's a nurse. So she's on me about being healthy. She wants to get at least 50 more years out of me. We'll see. Anyhow, last year I got a blood pressure machine, right? You put it on, you press the button, it syncs with my phone. I used it like 4 times last year. Last time I used it was July of last year. 6 months. I haven't touched the thing. Didn't even know where it was. And she brought it out. She found it. And she's like, "Hey, I want you to start monitoring your blood pressure again." All right, sounds good. I got really good blood pressure. She just wants to, it's a daily check. It's no big deal. I put the blood pressure machine underneath my Keurig where my coffee cup goes. So every morning I go there, I take my blood pressure machine, I put it on my arm, I make my cup of coffee, I sit down, I press the button, and the time it takes to take my blood pressure, my coffee machine works. I've had this thing for a year. I've gone 8 days straight now checking my blood pressure. Why? Because I developed a system that works. Here I am, a guy obsessed with data, with all the tools in the world, that wants to live another 50 years, and yet I had no system in place to check my blood pressure. So I made it as dumb as possible. I'm not going to forget my coffee in the morning, and now I'm not going to forget to do my blood pressure. So where do you start? Start somewhere and give yourself that momentum. Movement begets momentum. A lot of people, there's motivation out there. It's one of my I don't know. People call me a motivational speaker, and it irritates me, because motivation is fleeting. And so motivation gets you nowhere. And I know that I'm military, and we always say false motivation is better than no motivation. Movement begets momentum. Do something different. Don't just be motivated to do it. Actually put a practice in place so you start changing your behavior.
Yeah, I love it. So amazing. Keep it simple, guys. There's no, you don't have to have all the fancy gadgets, all of that type of stuff. Whatever works. I
Nope.
love it. So good. And one little, 2 cents that I'll add, right, is by learning the numbers, that we're talking about here today, and Andy's sharing you with, and as you become more confident, and you talked about cash, right? Cash is the most important, and you want to get external cash at some point for your business, right? Whether it's investment or whatever like that. You need to be able to know the numbers to be able to pitch this, right? To be able to get investment into the business, because they're going to be comfortable that you understand this stuff. So, if you want to go to the big level and getting that stuff, then that's why this is so important, not just for now, but for, growth and scaling on a much bigger level too.
Watch any episode of Shark Tank. Actually, one of my favorite episodes of Shark Tank was Shark Tank Australia. There was a woman that was selling bread. She was selling loaves of bread. They were costing her like $2.30, and she was selling them for like $13 a piece. Like 70-year-old woman just hawking bread, like $2.5–3 million in top line revenue. Anyways, watch Shark Tank. They ask questions. What's your top line revenue? What's your EBITDA? What's your customer acquisition cost? What's your ROAS, your return on ad spend? When people know their numbers, they get investments. It's no different than the bank. And I've sat on a handful of judging panels for people that are looking for grants or pitch competitions. The people that know their numbers win. Anybody can have a story. I got to know that when I give you money, you're gonna protect that money. And when you don't protect your own money, you're certainly not going to protect my money.
Yeah. No, exactly. Completely agree. So good, right? And all of that. And then, the world's your oyster from there, mate. And Andy, you shared so much gold with us here today. And I guess as we're starting to wrap up here today, what one key piece of advice would you like to give to all the entrepreneurs watching and listening today?
There's so many. I'm very fortunate to go on a lot of podcasts, and there's always this last question, and I always want to make it unique, especially because we talked a lot about the numbers, and I appreciate that we got into the P. Very rarely do we actually talk about financial statements. People are like, oh yeah, P&L, and then we move on. So I appreciate you letting me nerd out on that. Um, Piece of advice: lean into what scares you the most, and it goes in line with the book, right? Stop avoiding your numbers. It goes into this imposter syndrome that we all creep up on us. I'm launching a new workshop next week. I'm the guy that does workshops doing neurolinguistics programming. On Tuesday next week, I'm launching my new workshop. Last week, Saturday, I did a trial run in front of my wife and was terrible. Did not work well. And by Sunday, I'm like, maybe I should cancel. Maybe I should cancel it. Here I am. I'm the guy that teaches this, and I had that imposter syndrome that made its way from my toes all the way up to my brain. And I said, nope, it matters. Let me lean in. I did that same workshop for my business coach today after a lot of revisions. And he goes, looks really good. Tweak this, tweak that, and you'll be great. Lean into it. Lean into what scares you the most, because what you want in this world is on the other side of this obstacle that you've placed in front of yourself. It's on this other side of the dragon that you have somehow built up in your own head. Lean into the scary thing, and what you want is on the other side.
Yeah, I love it. So true, mate. And yeah, we connected through our networks. I learned about your awesome journey, starting in waste management industry like me, in business, to being in U.S. Army Reserves, and now doing consulting, teaching, podcasting, writing, and speaking. You're an awesome guy, mate. So knowledgeable. Shared so much gold with us here on the numbers and everything that's linked to that, and why it's so important for our business, so we can get up the next day again and do business. Work is the reward. I love that saying that you said here today, and continue to help people to, with their tactical advice to level up, understand the numbers, and succeed. Very grateful that we could look forward to partnering as well. So Andy, how can people find you and get in contact with you?
AndyWeins.com. It's the simplest thing. I'm on LinkedIn. We're connected on LinkedIn now. My phone number is on LinkedIn. I tell people all the time, reach out. You can text me. I'm that accessible because I want information and knowledge to be accessible. I mean, I was telling you, this is the latest I've ever done a podcast here stateside. It's 10:30 at night. It's about 3:30 in the afternoon for you, right? When people reach out, I never. This is a phrase that I grew up with in our household. Never neglect an opportunity. And so, for anybody out there struggling with your numbers, figure out the time zone difference. Call me when it's not in the middle of the night. Shoot me a text, and let's figure out how to get you from where you're at to where you want to be.
Love that. Definitely check out Andy there, the website, the LinkedIn, reach out to him. He's got his number on there. And, I just want to say this is a testament to how he's built the business so he can be accessible, right? He's built the team around him so he can do that. And that's why you're able to do that and get that freedom, right? To be able to do what you want. And the numbers is a big part of that. So love it, mate. It's been a pleasure interviewing you. Thanks for being on the Business Growth Show.
Cheers.
Thank you for watching and listening to the Business Growth Show, where we talk about everything on business growth. And please like, subscribe, and leave us a 5-star review. You can find me on LinkedIn, Facebook, Instagram, and YouTube as Athin Cassiotis, or visit my website, athincassiotis.com. And if you want to grow and scale your business, you'd reach out to me on any platform to see if we're a good fit. So until next time, remember that our business grows where we learn skills and take action using them in spite of fear. So let's create wealth and freedom together.